Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. Hey, Paul. Welcome back, man. How you doing?
Good, man. You see my tan?
Yeah, you've been on the boat, haven't you?
Yep, I was on the boat yesterday for probably 5.5 hours in the sun.
Oh, nice. You didn't wear a hat?
No.
You always wear a hat when we record these podcasts.
Yeah, I've got it right here, but now that I found a barber that knows how to cut hair,
Yeah.
I'm not,
All right, hopefully he's not listening.
shy about it.
Yeah. Nice. Yeah. Well, I did not go on a boat, but I spent the weekend driving a Corvette Stingray. So those new body styles. So I had my birthday this weekend, and Hannah surprised me by renting a Corvette for the day for me.
Super thoughtful.
Very.
And
She had to do it like 2 months ago. She had to reserve it
Yeah.
2 months ago because my birthday fell on a Saturday, which is
Right.
tough to get those.
Yep.
Like and then her birthday's only a week after mine, so she always sets the bar way up here, and she really sets it way too high for me, but she challenges me.
Yeah. No, that's solid. So Hannah, good on you. I approve.
Yeah. But I spent like a couple hours giving all the kids rides in it, so it burned half a tank just giving kids rides, and the neighbor came over and wanted to ride, so I got yelled at by some lady walking the neighborhood. She started yelling at me, and I was like, I can't hear you. The engine's too loud, and I just took off. So
It's so funny.
yeah, it was a good time. And then you made a little purchase over the weekend too, didn't you?
I did. Yeah. I have wanted one of the new Dodge Challengers since 2008 when they came out, and then the Hellcat came out in 2015, and then the Hellcat, then the Demon came out, and then the Hellcat Red, and all these, and I was like, and recently they stopped making the manual transmission, and that's what I want. I want a manual transmission because that's how I roll.
Yeah.
And I found one that kind of met my specs, and very low mileage car. It's got 7,400 miles. It's 2019. It's pristine. So I'm going to pick up that tomorrow.
And you're paying cash, right? You're paying cash like a good boy, right out of your checking account.
Yes. No.
No.
Of course not. Nope. No, actually, kind of like the land we bought for our retirement home in Tennessee. We're using just some passive income that we already have generated to make. I'm taking out an 84-month note, and I'm using that passive income to pay that note. Simple.
Yep. That's exactly what I did for the truck. So you live within your means on your active income, and the passive income is just extra. You can actually go buy your fifth car or whatever it is by now. Like Paul's a huge car guy. I like cars. I don't care to learn anything about them. Honestly, I just want to drive them. But if you want to talk cars, call Paul. He will be happy to just, you and Chad go on about cars forever.
Oh my goodness.
Yeah.
We talked a lot about it. He had a lot to do with this.
Oh, really? Yeah, that's fun.
Yes. Yeah.
Yeah,
I
sounds about
consulted.
right.
I consulted with him over it. So.
Yeah, nice. That's what it's all about, man. Consulting with other people with maybe more knowledge than you in a specific area and coming up with the best, result for you. So.
Yep.
Yeah, nice. No rival syndrome there when it comes to cars for you.
Nope.
So, today's episode is going to be kind of fun. So, and I don't know, maybe you remember how we stumbled upon the subject matter of Walter White.
Yeah, I literally think I was just on Facebook one night, and I was getting, just flipping through, and I saw a meme with his face, with his black hat, right? And it just occurred to me, like, man, if Walter White had life insurance, he wouldn't have had to cook meth.
Yeah, right. And you mentioned that, I think, after we recorded our last episode 19 on economic uncertainty. But this is like, there's more uncertainty in life than just economic. And Walter White's a perfect example of somebody who, so maybe not everybody.
Let's unpack Walter White for those who didn't watch the show. Like, Tammy has no idea who Walter White is.
Really?
Right.
Okay. Nope. So one of the best TV shows ever created is called Breaking Bad. Walter White was a 50-year-old public school science
Chemistry.
teacher,
Chemistry,
chemistry
right?
teacher, right? Making a very low, lower middle class wage,
Sure.
and just had a very humble life. And he was diagnosed with stage 3 lung cancer on his 50th birthday. Never smoked a cigarette in his life, but that kind of stuff happens. And I think the insurance wouldn't cover all the chemo or something, right? So he had trouble paying the bills and paying for
Yep.
chemo, and then basically stage 3. I don't know a whole lot about the different stages there, but I know stage 3, stage 4 is like pretty. It's basically terminal, right? So he gets cancer, and then in order to pay the bills, at least his excuse was in order to pay the bills and leave something for his family when he's gone, because he had a wife, a son, and a brand new baby daughter, or his wife was pregnant or something.
Yes, they definitely had a baby, I think.
Yeah. He wanted to leave him something because he was going to leave him essentially nothing, right? So he decided the easiest way for him to do that was to cook meth, because he's a chemist and one of his former students was a local meth dealer. So, yeah, so he broke bad, went from a chemistry high school teacher to a meth dealer, a pretty significant one at that, in New Mexico. So that was and then it snowballed from there, right? Like, you think of the actions you take today, that butterfly effect. Like Walter White's life, I Googled this because I posted about this on LinkedIn last week, kind of what we're about to talk about. And I found there was at least 200 confirmed deaths related to Walter White, but an unknown amount of secondary, third order, or second order, third order effects, and deaths and lives ruined and everything beyond 200.
Yes.
So who knows what that final count is? But what Paul and I discovered is that life insurance doesn't just save the day, but it saves lives. Like, it's not just there for when you die, but life insurance can literally save lives. And Walter White's a perfect, extreme example, but a perfect example nonetheless. So why don't you walk us through some of these things that could have saved the day for Walter and his family, and saved countless lives.
Yeah. Well, I think first and foremost is, and we've mentioned this on previous podcasts, when you get sick, it's too late.
Yep.
Right? The best time to get insurance, life insurance, or any insurance, like we talked, you had the analogy of, your house is on fire, right? You can't, it's too late. Too late to get that insurance.
Right.
No company in the world is going to underwrite that, right? It's the same thing in Walter White's case. It was too late. Now he might have had some coverage, right? Some group term through the county schools, right, or whatever, right?
Yeah.
But was it adequate? Probably not. Group policies that I've seen, at least from my clients, are fairly small. They're usually based on the income, and it's like, hey, it's 5 years of income or 2 years of income. Usually it's not much. Anyway.
Right. Yeah.
So first and foremost, having the foresight to get insurance when you're preferably young and preferably healthy. Step one.
Yep. Absolutely.
Right.
And you're probably not going to get any healthier than you are right now, unless you're really out of shape and you're working hard to get back in shape. So good for you.
Good for you.
For doing that. But chances are you're not going to get healthier as you age, right? And even if you are healthier, you're older. So life insurance is going to cost more. More of the premium you pay is going to go towards the same amount of death benefit as if you were younger. So, yeah. But Walter White, now we talk infinite banking concept style policies. So we just call them IBC policies for short. They not require, but to benefit the most from them, you want to pay significant premium, right? You can benefit from a mild premium, but really you start where you're at. Maybe in his case, he could have done a $5,000 or $10,000 a year premium, right? But maybe he couldn't. Maybe that $50,000, $60,000, $70,000 a year job as a public school teacher, with inflation and fuel prices and everything else like today, imagine that, wasn't enough, didn't leave anything left over for anything, planning whatsoever. So what would the option have been for him?
Yeah, so we talked about this in episode 18, I think.
Yep. Yeah.
Convertible term insurance, right? And we talked about how convertible term is maybe priced slightly higher than just vanilla term that you get from, Googling term life insurance, right? And buying from the first company that pops up. However, you have that option where you lock in your health rating, right, at whatever it is, standard, preferred, doesn't matter. But you lock in your insurability for that period of time, that term. In his case, let's say he was a 30-year-old teacher and locked in $1 million of term for 30 years. Well, he had 10 years of insurability left, and he could have converted a portion of that term or all of it into a permanent whole life product. Meanwhile, still having that term policy that he has contractual ability to pay premium on still in force, just at a reduced amount. So again, whole point, maybe he didn't have enough money for whole life, right? Because he was a single income breadwinner. But the term could have been there as well, right?
Right. Yeah, and the group term certainly would not be enough to support his family for more than probably 1 to 2 years tops. And the benefit to group term, if you cannot qualify for life insurance on your own, absolutely max out the group term. I just had this conversation with somebody the other day who, unfortunately, I had to talk to somebody this week, somebody who was going through the application process, and they got denied. And I said, hey, you have a W-2, you have a group term policy, go back to your employer or call that company through which you have the policy and ask, what is the maximum guaranteed issue amount? Because sometimes a company might guarantee issue up to $250,000 in term insurance. And that guarantee issue means you don't have to go through underwriting. That's the
right.
benefit of group term, right? You're just lumped into the group. Nobody goes through any underwriting whatsoever. They just want to know your sex and your age, and that's basically it. And then you get insured. So go that direction if you can't get life insurance any other way.
No, that's sound advice for sure.
Yeah. So good. So Walter could have done that. Could have had that convertible term insurance, which could have some of the benefits we're going to list here. That right?
They do. Yeah.
Right.
So one of the riders that come with these policies that we issue, generally speaking, are one is called the accelerated death benefit rider. Sometimes it's called terminal chronic illness rider, right? But essentially, the company will allow you to basically access that death benefit while you're alive. And of course, we would just do this. It's basically a policy loan, right?
Yeah.
We're going to do it if there's enough cash value. If there's not enough cash value, it's done differently. But using the death benefit as the collateral to front you that death benefit so that you can pay those medical bills. Maybe you go do your bucket list, do that final, whatever it is you need. And there's the specific criteria for the chronic illness or the terminal illness or whatever. But it allows you to access that money. So, I mean, how much is that worth? Well, if he had $2 million of death benefit, he has access to a portion of that death benefit before he graduates, and that is tremendous. I mean, it's tremendous value, and it would have avoided the whole
cooking meth thing
business.
Yeah, so because part of that, his whole cooking meth was, well, one, I want to leave something for the family when I'm gone, leave a legacy, but two, we got to pay the bills while I'm alive. So, and he couldn't do that. But like you said, that death benefit, typically you can take the loans against your cash value. The amount of cash value you have saved up. It's always collateralized by your death benefit, technically. But in this case, you could actually take a loan against the entire death benefit that you have, and it makes sense, right? From the insurance company's perspective, if, let's say, you have a permanent policy in place, or maybe you have a 20-year term rider or convertible term in place, you and your terminal, meaning a medical professional has said you have less than 12 months to live, then the insurance company is going to have to pay out anyway. So they're just fronting you some of the money right now, and you're still going to pay interest on that. So it's not like the insurance company is going to lose big time, but it's one of those things that's baked into most of the policies that we write. Like, it's just, it's gratis. It's free. Yep. It's just there. And almost nobody understands that piece of their policy until I walk them through and be like, hey, did you even notice this? This is pretty cool. Just keep that in mind down the road if, God forbid, anything bad happens.
Yep. Tremendous value.
Yeah.
Tremendous unknown value to most people.
Absolutely. So, yeah. Well, and then you mentioned the chronic illness rider, which is, there's like 6 activities of daily living: bathing,
Yep.
toileting, feeding, you know, getting around, etc. If you can't perform 2 of those, then this rider kicks in. You get to access your death benefit while you're alive. Pretty amazing.
Yep.
Yeah.
I tell you, it. Once people read that though in their policy, they're like, "Oh, this is nice." I was like, "Yes,
Yeah.
yes, it is."
I mean, it's not technically long-term care insurance, but it's
Right.
it's very close. It's
It
like a
competes
close,
with it, sort of.
yeah, it's like a first cousin to
Yeah.
long-term care insurance.
Kissing cousins.
That would be second or third cousin. I'm not quite up to. I'll have to Google that one. Uh,
When in Rome. Well, that doesn't really apply here.
but go on. Well, here's one. You mentioned access to cash value. So if you had one of these IBC style policies in place, presumably he would have been paying those premiums for several years because he's 50. Maybe he was fortunate enough to hear about it when he was 30. So he's got 20 years of paying premiums. He's built significant cash value. He could just pull from that to pay those medical bills, to do whatever needs to be done while he's alive. Because knowing that even if he depletes all of that available cash value, he's still going to have a death benefit that is much larger than that in place
right.
to be there when he's gone.
Yep.
Yeah.
Absolutely.
So
Yeah, we've talked about it. Oh no, go ahead, Dave. Go ahead.
Oh, the
Sorry.
death benefit's going to come in income tax free, right? Which I think most people know, but that's
It bears repeating because a
it
lot of
bears
people
repeating. Yeah, you're
a lot
right.
of people don't know that.
I think we just assume people know that, life insurance is income tax free, just like every other type of insurance payout. But sometimes people are surprised when they hear, that $5 billion my family's going to get, they're not going to be taxed on it. Well, no, not for income. Yeah. So,
Right.
yeah, that's pretty cool. So, well, the next one was talking about that death benefit, but here's something interesting that I looked up. This show, the setting was New Mexico, right? I think Albuquerque.
Very
And-
familiar.
You are?
Yeah, I spent some time there a few
Yeah.
times. TDY and stuff.
Okay. Yeah, we've got, there's an Air Force base there, and I spent a couple weeks there a few years ago for some training. And I was a big fan of Breaking Bad, so I Googled, like, where's Walter White's house? Where's Jesse Pinkman's house? Like, where's that chicken place, Los Pollos Hermanos?
Yeah.
Which they renamed it. It's not Los Pollos Hermanos anymore. It's a completely new restaurant, which I don't understand that. I would think that would have driven a lot of business. But anyway, I actually went to Walter White's house and got a picture taken out in front of it. It's pretty cool. Although it looked like looked kind of like a small little prison because there was big metal fence up, lights, a sign that says, no loitering or don't take pictures. So I parked a block
It's
away.
certainly not a property I would have purchased, I think.
No, I don't know that was a good investment on their part, but I could be wrong. But back to my point of him being a New Mexico resident, this is something a lot of people don't understand about the cash value in your life insurance policies. In many states, in most states, in fact, and I looked it up for New Mexico, his not only his death benefit, but his cash value was protected from creditors and bankruptcy. So, say he had significant cash value built up, but these medical bills were $1 million and he didn't have that much. Well, he could have filed bankruptcy. I don't think there's no such thing as medical bankruptcy, but you can file. That's part of the whole bankruptcy package is you can add medical bills and everything to it, as far as I understand. So he could have filed bankruptcy and wiped all that debt out and still had access to all the cash value he had built up over all those years. It could be $200,000 and it's untouchable except by him. Pretty amazing.
Yep. Again, the attributes of this product are they're phenomenal, right? It's too bad they're not more widely known. It's really unfortunate.
Yeah, that's usually the question we get is, I was talking to a client, not quite a client yet, but somebody this last week, and he's a business owner, a lot of cash coming in, a lot of cash going out. And I put together a really large policy for him. And he looked at it and he's like, well, he was almost at a loss for words or questions to ask because he was looking when we were walking through everything and explaining it to him. He's like, well, it's really kind of a no-brainer. Why doesn't everybody do this?
Oh, love that question.
Yeah. So how do you respond to that question?
Well, it depends. But the more I think about it is, we're bombarded with disinformation about whole life insurance. Not necessarily dividend paying whole life insurance, but whole life insurance in general as a financial tool, right? And this misinformation is propagated by, powerful people with a lot of reach, people with endless amounts of money to put ads on TV or on YouTube or whatever to say, hey, look at, when's the last time you saw a commercial for one of these things, right? Never.
No, right. No, you don't.
No, all you see is, TD Ameritrade and that's fine. But what I'm saying is, it's not surprising that there's only whatever 600 or 700 IBC practitioners, yet there's tens of thousands. I'm assuming I'm making that number up, but certified financial planners, different brokerages around. So that's how I kind of leave with it. I was like, well, I'm not surprised. Look at the current monetary regime that has been established. This is why you haven't heard of it. It's kept from you by design. They use it in their own life. I had this conversation yesterday on the boat. They use it in their life, right? They take your money, gamble with it. Then, for their pension plans, they're out there buying life insurance products in annuities.
Yeah. They're buying guarantees.
Crazy. And they're like, really? I was like, yeah, you can look it up. I was like, look it up. You can look it up on FDIC, how much cash value life insurance some of these big banks and big corporations have.
Yeah.
A ton of it.
Billions. There's a name for it, BOLI and COLI. Yep.
Bank-owned life insurance and corporate-owned life insurance.
Corporate-owned.
That's right.
So, if it's so big they have a name for it, then, it's pretty prevalent. And I'm just going to look at the banks and see what they're doing, and I'm going to try to replicate it.
Yeah, and wealthy families too. We often mention one particular wealthy family, but you look at J.C. Penney, Walt Disney, and how those companies, some of their origins where life insurance money was used as capital, as a source of capital or a source of collateral to do what those companies needed to do at the time they needed to do it.
Yeah.
You and I, we got our start somewhere. Why didn't we know about it before then? Well, because we weren't taught it.
Yeah, people in high places know about it. I think our president has millions in whole life policies and permanent life insurance policies. So
I bet you he does.
Yeah, I remember reading that somewhere. So, yeah, you're right. It comes down a lot to money and who's doing the marketing. So life insurance companies are conservative for the most part. The ones that have been around for a long time and are going to stick around for a long time are very conservative. So their marketing budget is not going to be as great as Merrill Lynch, Edward Jones, RBC, UBS, any of those.
I would say this, especially companies that are focused on this product, specifically whole life dividend paying whole life insurance. There's not a massive profit margin. When you look at term providers like, I don't know, like Primerica, for example, right? That's one of the better known term companies out there, right?
Yeah.
We've talked about this. Term almost never pays out. Or the company that administers SGLI for the military, they're collecting, $26 a month times, I don't know, 1.5 million people every month. Right?
Yep.
That's a lot of money.
A lot of money.
That's a lot of premium that most of it will never be used to pay out a death benefit.
Right. Because that's just, you're just talking military, and most of them are going to leave long before they die.
Yep.
So yeah, that's a lot of income that has no obligation to it. Really, it does while it's being paid, but once that person is done paying, that income had no obligation. So
that's right.
Yeah, and what you said, term life almost never pays out. Convertible term, on the other hand, is a term policy that could pay out 100% of the time if people take advantage of the conversion.
That's right.
But it's still cheap.
And it's still cheap.
Yeah.
like I said, I ran some numbers for a gentleman a couple weeks ago, and he's like, wow, that's not that much higher than the quote that I got from wherever. And I was like, okay, great.
Right. Yeah.
Great.
Well, so let's bring this, kind of wrap this up and bring it back to Walter White. Things would have been so much different, not just for him, but for
a lot of people.
So I looked this up. 167 people were on that airline that got blown out of or that collided. Those two airlines that collided. 167 lives.
The dad was the ATC guy who had his daughter had just overdosed with with
Jesse.
With Jesse.
With his other drug dealer and partner.
And he was, oh my goodness.
Yeah.
And all I could see is the stuff falling into the pool.
Yeah. So it was indirectly, right? He didn't shoot it down or anything, but indirectly, he's responsible for those deaths. Yep. And then, drug dealers, which, okay, maybe it wasn't such a bad thing that, some people got taken out.
Collateral damage.
Collateral damage sounds like a good title for a movie. But and then there's his brother-in-law Hank, who was a DEA agent. So Hank is dead now. So you got one good officer who's not around to take bad guys and drugs off the street. So that's
his partner too.
His partner.
Yep. The brother-in-law had a partner there with like a 12-gauge pump shotgun, which is, why would you have that in like open desert? You need like an AR platform. But anyway, yeah.
Yeah. So who knows how many guys,
two good agents.
How many lives they would have saved, if they continued their career.
Yep.
And all the wreckage that ensued with those lost lives and the families and loved ones left behind. So by the end of the show, his son hated his guts.
Right.
Was ashamed to have the same last name. His wife hated him. He never knew his daughter. And his face and name was plastered all over the country as one of the most, FBI's most wanted, Heisenberg.
Yeah.
Right. So what kind of legacy did he leave, and what kind of legacy could he have left?
Right. I mean, there's two Walter Whites, right? There's the Walter White that was the IBC guy for 30 years, paying significant premium, had proper amount of insurance in force. And then there's the reality of Walter White, which was the complete opposite. He did cook some good meth, they said. I don't know much about it, but it was really crystal blue or something. Like, it was really sought after, right? That's why the guy from Pollos Hermanos was like, "Hey, you need to make this for me, and here's my lab underground or whatever."
Yeah, Tuco really liked it too.
Tuco, So, so he had a legacy from his recipe, I guess.
Yeah, so his legacy was murder and ruthlessness.
Yeah,
like that's the legacy he left. Death and hate and drugs, and what kind of legacy is that? What kind of legacy could he have left if he had these IBC style policies, or at a bare minimum a convertible term life policy, significant death benefit included? He could have. His son would be singing his praises, would love him forever.
He'd be toasting him. Yep,
toasting him. Was naming his kids after his father. His wife would not have cheated on him with Ted, and Ted would still be alive. So there's that. Yeah. And he would have a legacy of kindness and goodness, and he was really a good dude until he broke bad.
Yeah. So, poor Walter.
Poor Walter, man. So for anybody listening, if you're going through tough times, you don't need to cook meth. But if you're not going through tough times, or if you're going through tough times and you're healthy, get life insurance. Like, it takes no time at all. Just do it. It doesn't have to be with us. Just do it.
Yep.
Yeah.
Everybody, what is going to prevent your family from thriving after you're gone, if you're gone all of a sudden, right? And what amount of money would that take, right? Likely it's whatever times your income. How many years, right? So if you're 30, 35 times your income.
Yep. So, how many years is your family going to be depending on your income?
That's right.
Yeah. And what could happen in your life that could derail all of your financial goals and aspirations and plans from now until retirement and beyond? Like, what is one little thing that could derail all that? One thing could be a severe illness, a medical issue. soaking up all of your money and everything else, and making you uninsurable.
That's right.
Yeah.
Yep. The future's unknown. You have to hedge against it.
That's right. Well, I think that's the most I've ever said the word meth in a 25-minute period in my life.
It's not something I, generally talk about. I don't know much about it. Although I did see, unfortunately, I saw a woman at the airport when we were going down to Florida that I think was she might have been going to like a rehab place in Florida or something. I don't know, but just, you could tell she had like the signs. The few things I do know are what people look like when they're doing it. And
yeah.
Hope she gets better.
Yeah. And everything I learned from Breaking Bad. So
right.
If you haven't seen that one, highly recommended. Not for kids.
Nope.
So watch it when they're in bed. But yeah. All right. Well, I hope everybody was able to draw a good correlation. And I tell you, if you haven't seen the show, you go watch it. I hope you think every episode that you're watching, man, if he had life insurance,
I'm sure they'll think that.
this show would be a lot more boring. But
right. It would have been no show. Someone said on Facebook, well, there wouldn't have been a show if that were the case. I'm like, oh, that's true.
That's true.
Well, it could have been an and asset, right? He could have done both.
He could have. No, you're not kidding. He
could have started the business with a policy loan. No, I'm just kidding. It's getting ridiculous.
Who said
he would have seen opportunity?
Yep. He would have seen it in a different light.
Or he could have just been like a private lender and just been like the guy who,
be like
the brains behind the operation, right?
Like a
silent
drug
partner
dealer,
or
but
something.
like a good drug dealer, right?
Yeah, just a capital provider. I mean,
yeah. Yeah, no, I hear you. Entrepreneur.
Yeah.
At the end of the day, he was an entrepreneur. Not a good one. Well, all right, everybody. I hope you stuck with us, and looking forward to next week. Not sure what that'll be, but stick around, come back, and I hope it'll be entertaining. If you like what you hear, thanks for the ratings. I think we got a lot of 5-star ratings. We got 1-star rating, so congratulations. Yes. We hit the big time. We've got a hater out there. Yes. At least one. He or she
for
made
that person,
known.
Please go buy some term, invest the difference. Don't spend the difference. Invest the difference, and everything will be great.
Yes, and make sure you pay for all your automobiles and your house with just cash.
Pay cash. Pay cash. Use that sinking fund, and things will be great. No, but seriously, appreciate it. That's good. I hated like having 71 5-star ratings, and we'd like,
it just looks fake, right?
Yeah.
But now it's legit, because I definitely wouldn't go give myself a 1-star rating. So
yeah.
If you have any questions, send them in, and we'll start covering those again. Maybe we'll do one every episode, like beginning of an episode. We can cover the most recent question or something like that. That might be a good way.
Great idea.
One that actually Paul had that I just stole from him and pass it off as my own. So, all right, buddy. Hey, we'll talk to you next week.
See you, pal.
All right, bye.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle in a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.